Good morning. What's up, guys? How we doing? Hope you're having a good morning here so far. Bell's gonna ring here in a few seconds, so let's get down to business. First, as usual, here's the bell. There we go. Let's see what we get as far as volatility off the open. Hopefully, it's a little bit more than we had yesterday. Man, yesterday afternoon was ATR, we were holding like 13, 12, 13, but it was getting kind of low. All right, now, business first as is typical. So, let's first take a look at what the market's doing. You have, of course, if you're maybe relatively new here, top left is the 5-minute, top right of the charts is the 2-minute, and the bottom is going to be the daily. Now, as far as news, here's what we got for news on the day here today. 9:30, we get EIA crude oil inventories. That's, by the way, probably not going to move the Nasdaq all that much. It really is only going to move the Nasdaq if it moves the S&P quite a bit, which usually it doesn't, just for context. All right. Now, you can see we have something going on with Trump at 10:30. He's greeting the South African president. Probably not market moving stuff. Fed speaker, 11:15, 11:45. Trump's hosting a meeting. And at 3 o'clock, Trump doing some sports stuff. That's about it. That's about it as far as that. Now, market inertia. Okay, let's take. Are we back? I think we're back. We should be good to go now. All right, we're getting a big old push here off the open. Now, by the way, guys, these pushes off the open, especially in a range market like we're currently seeing, these cannot be trusted. Okay? So, you gotta let it do what it's gonna do. These are all institutional orders. Let them work, and then let the setup come to you and develop. All right, that's about it. You can see we're in a range here pre-market as well. So let these institutional orders clear. Usually, in my experience, that's going to take between 10 and 15 minutes, honestly. So trading in the first couple minutes of the open, if you can find edge, have at it. I think it's tough to find edge in the first couple minutes of market open. Good morning, guys. What's up? How we doing? Keith, Jeremiah, Rick, Traden, Chris, John, Scooby-Doo. What's up, guys? J-Flow, how we doing? All right, now, we really should look at here. The range yesterday, total, ended up being 176. Now that's points, okay, 176 points. By the end of the stream yesterday, the range was less than 100. And we ended the stream coming into 11:30 Central. It's 12:30 Eastern, that's crazy, ridiculous low. So we expanded a bit. Got that range up to 176 in the afternoon, but let's see if we can get that a little bit higher here today, ideally. But number one concern right now is getting volatility up a little bit. You can see here, if we look up top, these bars coming off the open here, that last bar was only 22 points. But we had a 50-point bar, that big opening bar. So that's actually a little bit higher than we've been seeing as of late, which is good. Yesterday, if I remember correctly, the opening bar was like 30-something points, which that's tight. But we gotta let these institutional orders clear. And I'll tell you guys what, I hate to run out on you this quick, but I will be back in a few minutes while that occurs, and we'll start putting on some setups, all right? Be back in a couple. We are back, baby. All right, just in time. We're coming into 8:45 territory here. And we can start putting on some setups. So you can see we're coming into that pre-market little peak. At least that we put in right around 6:30. Old school, good morning, Mitz. What's going on? Chris, Josh, how we doing? All right, ATR is expanding a little bit slowly but surely. We're working our way up toward 20. We're at 19.5 as it currently sits. These 2-minute bars. Now we're sitting at ranges in between 20 and 30. Taz, good morning. What's going on? All right, now for context, we're about 80 points away. We're in the red right now, the Nasdaq is, right? We're about 80 points, 75, 80 points away from the break-even point on the day for the Nasdaq. So, you know, I gotta tell you, I think this always puts us in a weird spot, okay? Because I would love if the market just flew upside all the time. That'd be great for everybody. Though, realistically, it probably wouldn't be because it would all collapse. So, in a real world, as traders, it's like when volatility's dead like this, I'm not going to say dead because it can always get worse. But when volatility's not ideal, we'll put it that way, the quickest way to fix it for us as traders who rely on generating revenue through volatility, the quickest way to fix it is to get a big old downside push. So you kind of, in situations like this, you find yourself kind of looking for that, or just, not that it really matters what you hope for, but just kind of hoping the market maybe dumps off for a little while and lights a fire. But it's not fun, I guess, to have to root against the U.S. market, because people get hurt. You know, but with that mentality, you can make the exact opposite argument that if the market shoots higher, a bunch of shorts are getting hurt. And those are regular people too, believe it or not. Well, Quicksilver's here, so it looks like we may be getting that after all. Lee, good morning. How you doing? All right, we are into 8:45 territory, which means we can start looking for nice, clean setups. Here we are getting I mean, we've seen this a million times, right? We have about 60, 70 seconds left on this 2-minute bar here. You get a big bull bar, shrinking bull body, and then this bar remains kind of a wicky off bar through the development of it. This is an attempted reversal sequence out of the bears. It's very early stages. We'll see if they can. Again, these early morning, like right off the bell pushes, they're, especially in a range market, they're just kind of hard to trust until they really prove themselves. So let's see how this ends up developing here, though I'm not against continuation if we get a reasonable setup to do so. All right, here comes the rollover here, this bar. See that? We locked it in just barely a red doji. You could tell bears are trying. This is a battle up here right now. Ooh, TL says, we commonly hear about shorts being squeezed and shorts covering. I know it's not as common, but why isn't the term long squeeze used? TL, do you mean to the downside? Like in a crash, the longs, quote unquote, get squeezed and we dump off? Do you mean that? Or are you still talking about an upside move? Yeah, I mean, interesting thought. I guess you kind of could call it that. But in reality, it's more just psychological and emotional distress out of everybody. It's a little bit of a different thing, because when the market's squeezing upside, everyone looks at it as kind of a fun thing, because I think we as humans naturally look at bears, we look at shorts as kind of like the enemy. Because, I don't know, it's kind of fun to do so. It makes sense. They're betting against the market. Even though I have no bias whatsoever, I'll go either way. Interesting thought, though. Short squeeze, the term squeeze is kind of a fun term, right? Because it's a fun environment to be trading in. Because you kind of feel like you're winning. The bulls, like the good team is winning. And the bears are kind of seen as like the enemy from most people. I just think naturally. And a lot of times bears too, when they come out and they're like publicly bears, like they're kind of having fun playing the villain in a way. At least that's the way that I think about it. And there's nothing wrong with that either. It's just what side you want to play today. Garrett, doesn't the idea of shorts covering make sense? That short positions are always margined, whereas longs can hold out. Yeah, so there's also that aspect. Whereas longs, you technically have limited risk when you're long, let's say like a stock, for example. Because it can only really go to zero. If you're long an ETF, you also have limited risk for, you know, whatever pennies on the dollar it would end up going for in an Armageddon scenario. I suppose zero is technically your ultimate limited risk. Though if SPY goes to zero, we have bigger problems than your position going to zero. That's the way that I think about it. But with shorts, if you're short a stock and it goes from $3 a share to 35 or 70 or 1,000, which we've seen, which is crazy, that's obviously a huge problem. You end up owing the broker money. All right, we got 19 seconds out here. But I gotta tell you, in a range market like we're seeing, I would prefer to see a growing bull sequence, where this currently is kind of a shrinking bull body sequence. And I'd prefer to see 3 consecutive bars. So that's about equal size bull bars on the close. That's actually quite a clean close. Though I'd prefer to see a third, because I know what kind of market we're in. It's a range market. So I gotta wait for a little bit more confirmation here. Now, for context, yesterday's New York session close is where we're at right now, 21.4. And the high was 21.474. Okay, but we're still going to be red on the day because the New York bar gets measured a little bit earlier than the futures close. Now, you guys see here, not taking that trade was a discretionary call, right? If we were in a trend market, I know a lot of you are looking at this bar and you're probably like, well, why didn't you hit that? Why didn't you buy the rollover, regardless of what this bar is currently doing? This looks like a good setup, right? Well, we had this doji. These were equal sized bodies. Arguably, this one was maybe a little smaller than this one. And we're in a range market. So I kind of need to see after this and this not growing, I needed to see a third bar, because a lot of times in a range market, when you get this, you get the rollover after the push off the open, and it does that. This is exactly what I was afraid of, which is why I didn't take it. Now, 21.4 is I would call it maybe a tier 1-ish, possibly tier 2 level, because again, yesterday's New York close is sitting right around there. And then we have the break-even point on the day, 70 points to the upside from here. I'd love to see this just curl and head lower. It causes less issues, I think, at least for me. Debo, good morning. How we doing? ATR creeping up. We're at 21.84 now. It's still low. Market volatility is relatively low, but the range on the day is already at 127 3/4, which that's a good sign. Okay, the range on the day yesterday was 96 after almost 3 hours, which is absurdly tight. Willie, good morning. Very common, by the way, after you get a push like that to start seeing a flattening out. We've seen this constantly lately. You see a flattening out, and then the direction it goes after it flattens out into whether it's an ascending channel or just a flat top move sideways for a little while. The breakout from there is usually, seems to me as of late, it's been about 50-50. So I'm really waiting to see a little bit more candle development. I think the market's trying to decide right now whether to carry this move higher or just pull it back. Based on the opening move, I mean. Jacob, what EMA do you use at the moment? I use 20 for the most part. I am using the 20 EMAs, though it is most relevant for me on the 5-minute. I just really use it on the 2-minute for context. You're looking at a 2-minute chart right now. In a lot of ways, just so I can kind of adjust my eyes and quickly know where we're at compared to my other 2-minute chart. Let's see if we can get a decent curl here. I'd love to see this bear bar close below these little wicks. And then get one more bear bar closing near the low. 20 EMA on the 5 minutes at 326. There's about 50 points of room between here and there. All right, not bad, not bad. Let's see if this candle can break lower. All right, roll over this 2-minute here, coming in a few seconds. See those bulls step in last second, wick it back up inside of those previous bar wicks. You see that? All that little last second movement, it really does tell a story. I mean, price action's king. Neil says, I know you like clean charts. Is that why you don't put the 50 EMA on your 2-minute chart, which is effectively the 5-minute 20 EMA? I just pick one and roll with it. Listen, if I throw a 10 EMA, if I'm going to be maybe trading a little smaller, scalping more often, I might throw a 10-minute EMA. I'm sorry, a 10 EMA on the 2-minute chart, and use that for context, just because it's a quicker feel. But right now I prefer the 20 on the 5, so I just throw the 20 on the 2. At the end of the day, I don't want to focus too much on exponential moving averages. They're just not relevant enough to spend energy on. The reality is, on the 5-minute chart, you know, you come right into that, people are going to pay attention. Why? Because it's watched. Because it has eyeballs. That's the only reason. It's the only reason. You just pick the popular one, throw it up on a popular time frame. The 2-minute is not a popular time frame, so I don't care too much about any moving average on the 2. I care about what people are seeing and doing, which is why effectively everything you see, look at this move, which is why effectively everything you see me do is going to be based on self-fulfilling prophecies and real price action data. That's it. That's it. Try not to overcomplicate it. Finding edge is complicated enough. Well, quite the wick. Good. Good, good, good. We got a 78-point range bar. Even though that was very likely a headline, let's see if we can get some bit of a fire lit here. Pull up that ATR. That yanked it up to 27, though one bar carrying the average is not as exciting. Quicksilver, genuine question for you. Do you ever trade to the long side? I'm actually very curious. Well, headline here, the EU prepares a trade proposal for the US to steer momentum into talks. Actually, I think it reads more like the EU prepares a trade proposal for the US, comma, to steer momentum into talks. Yeah, that makes sense. Dips and Peaks, what's up, brother? How you doing? All right, come on now, let's hold some of that volatility through the morning. Quicksilver says, I find longs to be more of a gamble versus shorts based on the selling domino effect. You know, that's actually an interesting perspective, because if we think about the data with a big sample size like intraday, if we were to run a whole bunch of data as far as trade probability, we separated it by longs versus shorts, there's at least one thing working very much in the favor of each side. To the longs, you have positive drift, right, where over time the market tends to go up. So you're going to have more up moves than you are down moves, technically. But we're not really looking at long term. We're looking at intraday. So that effect, I would expect, becomes quite a small percentage addition to going long. But perhaps, as Quicksilver has pointed out here, and obviously this makes sense, I think most people have probably thought of this. Intraday, when you see downside moves, they tend to create a domino effect, like Quicksilver said, and the moves tend to happen faster, which can hit you hit you out of target maybe a little bit more reliably, slightly going short versus going long in the average market across a big sample size of these trades across all market conditions. It's an interesting perspective. I would... They might balance each other out, but I would bet that there's probably a very small advantage to being long if you're an intraday swing trader over being short. Very small, very, very small. And I would bet that if you're more of a scalper, like 30 minutes less, especially like 5 minutes less, you probably have that equal very small advantage going short versus going long. But I think it's probably too small to really think too much about. But it's interesting to think about. Jack, good morning. How we doing? All right, you guys see here, we're getting a lot of small little doji bars with a big wicks. You can see some better development here. But I gotta tell you, I'm watching this channel. If we could actually get a push higher, if we can get a push higher, that's what I'm looking at. But I need to see a bounce up out of this hole and then a pullback. Dips and peaks. Took almost a month, but I just passed my first Apex eval, only traded micros. Good work, brother. Good work. It's gotta feel good. And you know, when you pass an eval only trading micros, there's a lot more to that than passing it trading a lot of minis. If it's like your first go with trying to pass funded evals. Because anyone, by the way, I'm watching this test of this little trend line here. Anyone can pass an eval eventually if they trade enough of them, trading like 10 minis, right? But not everyone could pass taking their time trading micros. All right, we have the rollover of this 2-minute bar coming in about 33 seconds. And we have covered essentially the entire gap in this little channel with one bar, which I'm not excited about. I don't want that to come off like that's a good thing. That's not a great thing. I prefer to see multiple bars coming into a test. Let's just see if we can get a wick back up, a rollover, and then a retest. I'll be thinking about that. Oh, there's kind of a tight rollover. ATR is currently at about 27. Yeah, I gotta hold off on the channel right now. I'm not big when the rollover occurs and it's very close to the level and then it tests it before the bar really expands much. It just starts to weaken. But if we can get a nice big bounce and claim new highs on the day and then retest, I'd happily buy it if it was a clean test. But right now I'm thinking more. All right, do we break downside and get a nice little continuation inside of the opening range? That would be relatively nice. But then we got to think about the 5-minute 20 EMA. It's always something. Garrett, best resources to learn day trading. Watch the stream, it's free. And we do the thing. Not just talk about the thing. Nico, I'm struggling with passing a small eval with micros. Should I be trading NQ instead? Let me restart this. Nico, I'm struggling with passing a small eval with micros. Should I be trading NQ to get through the eval, still adjusting to day trading futures? Lance, do you have, now either answer is okay, by the way. Do you have a track record of being able to consistently pay some bills with trading? Or have you been struggling a little bit with being able to generate consistent enough revenue? It's never going to be like, okay, I make the exact same amount every month. Okay, so Lance says no sir, not yet. So in the early days of trading evals, I think trading micros is the better bet because you're finding your edge for very little money. The micros, they're very cheap. Like you're not here to pay a light bill, so it's like the eval, I'm sorry. The evals are very cheap. You're not here to pay a light bill. You're not here to cover the water bill. Ideally, you're here to do really well. So when we're talking about like, okay, I can buy an eval for $16 when it's 90% off, or, you know, $34, $33 when it's 80% off. It's like, okay, like that's a pretty reasonable investment. But if you're just gonna blow it, you know, if you trade that way and then you trade that way in the funded account, you're probably gonna get your payouts declined anyway. So trade the eval small with micros, so small that you don't blow it, taking even 5 to 10 trade losing streaks plus. And I get it, it's tough. I get it, but the reason it's tough is because either the market's it's been kind of a tough market. The price action has been really tight. Volatility's been not that great. It's just been low, is what I mean. But still, I mean, you should be able to at least be treading water in the eval with micros. And if you're not, then that's a good thing. That's a benefit. That gives you information. So you're getting all this information for whatever you paid for the eval, you know, $16, $33, $50, $100, whatever. You're not here for that. You're here to find your edge for as cheap as possible and then scale it once you're ready. You don't want to spend, you know, $100,000, $500,000 trying to find edge. I've been there. It's not fun. And you know, it's also not necessary. You can do it so much cheaper. Just put the ego aside. Take your time. So you guys can see here, look at this. I mean, we are pinned. I held off on buying that Trendline for good reason, at least for me, and we, of course, are starting to see this. It's just the pattern recognition. You see that big bear bar here, right? This big bear bar closes the entire gap in essentially one bar, rolls over, already pinned. And lately, when we've been seeing that, we start seeing this. It's no longer like a clean respect. We start seeing this kind of shit, like almost every time. Fear and Greed Index just came in. Not that it really helps us that much, but it is interesting to look at. 68 out of 100, indicating greed. But when I look at this daily chart, bottom of your screen, I see indecision. I don't see too much greed. Lance says, I'm having trouble separating my mind from the money, even though it's just the cost of the eval. This is a very common feel, by the way, and you know what this is? This is the fear of loss overcoming the motivation to win. You get paid in this market to take risk, to put on risk. Right? And in order to do this, you have to take losers often. In the futures market, if you're going 1-to-1, some like 40% of trades you take, maybe sometimes it's 20% are going to be losers, maybe sometimes it's half or more, depending on market environment. But over time, 40% or so of your trades are going to be losers, assuming a 1-to-1 reward risk. Not that you have to do 1-to-1, but I'm just making the numbers simple. And I get it, it's tough. It's tough to separate from fear of loss. But the reality is, try to get yourself in a mindset, even if it's fake for a little while, that you're more excited for your future of winning and actually achieving the quote-unquote dream of being like a trader. You're more excited for that than you are scared to lose in the short term. You got to put yourself in that mindset. Well, we were getting pinned here against this trend line. Jeremiah, bought my first eval this week. Plan is to trade 1 micro till I have enough data to confidently take larger positions. How many trades do you think is enough data? By the way, we're trying to pull away here from this trend line. Let's see if the bulls can. We're coming into a little bit of a flat top. So Jeremiah, how many trades do you think is enough data? So what I usually tell people is that if the edge after 30 trades, we'll call it quote unquote edge because we're not really sure yet. But if the result after 30 trades, because we got to be realistic, right? Like we can't all wait 500 trades before we start trying to scale something. After 30 trades, if the edge is substantial, or at least seems to be, double your size and keep collecting data. Now, when I say double, I'm assuming that you were starting with like 1 micro, right? Not 1 mini. Once you get to 50 trades, things are looking a little better. 100, I think, is kind of the minimum to have a decent idea. But really, like 500 is going to be best. But that's unrealistic. So I could just sit here and spew whatever and say, yep, got to get to 1,000 trades. Okay, well, thanks, bro. Like, now what should I actually do? If you take 30 trades and the edge is really small, like you're not green very much, but you're a little bit green or break even, you're like, I'm not really sure. Take it to 50 or 100. You're going to need to know, because that setup probably doesn't have substantial edge, but it might have some, in which case you still want to know if it does, because edge is hard to come by, so you want to get it whenever you can. But again, I would say if it's a lot of edge, or a good amount of edge, after 30, like the result is good after 30 trades, maybe double that size up and take it to 50, 100 trades and see if that holds. If it doesn't hold, then cut it. But if it does hold, then you can keep scaling. But all that to say, the more edge you seemingly have, the smaller sample size you can get away with. But I would still say like 30 is kind of the minimum in any case. Bumble, I hope not, brother. I hope we clean up. I think we will. I think we're going to clean up and pull away from this little trend line here. That trend line there is what I'm referring to, of course. But you see this, it's like, man, this market can't decide. Vinny says 21,400 is not friendly today. Yeah, that was yesterday's New York close. Not the actual close of the contract, but it was the New York close. Again, not that that's the only reason that this is happening, but... Here we go. Finally getting a little bit of a downside push, trying to. That line there, that's just the 20 EMA on the 2-minute chart. I'm not really too concerned with that. I'm not looking at it too much. We'll see if it comes into play at all, but typically, if it does come into play, it's often a coincidence, or it's lining up with the 5-minute, which is more psychologically relevant. But we are getting a lot of bars here in the teens as far as point range for a 2-minute bar. That's small. Rod says, looks like we might get a flat top breakout soon on the NQ daily chart. What are your thoughts? Yeah, so right above Ron's comment there, that's the daily chart. You can see we certainly have a flat top. And we were talking about this a lot. It's right around 21.5. Now, 21.5, it's a range, okay? It's not like 21.5 exactly. It's going to be maybe a 50-point range surrounding 21.5. But yeah, I agree. I agree. Right now it's holding us back, but once we can get a nice sustained push, it wouldn't surprise me at all to see a few 100 points through that level. So this is a really common occurrence we've seen lately as well. You guys see this? We get that strong, tight little push off the open, and then you start to see it flatten out because it loses steam because we're in a range market, and I think a lot of bears step in like, hold on now. We're not in a trend market. So you start to flatten out. And then what you end up seeing is you end up getting this argument for a flat top, and then it starts turning into an argument for a descending resistance. This is just so common. This is one of those cases where I'm actually thinking about this. I would not be against. Ooh, this starts getting interesting. I wouldn't be against if we got another little up test here. Test of the upside, I mean. Thinking about kind of an always in position where I would cut it at the usual maybe 40 points. With the potential for maybe a 1.5, at least a 1R, but maybe a 1.5R plus winner. A slightly lower probability, actually a meaningfully lower probability trade, but a better reward to risk. Just because you start seeing these little clues of a potential curl, but if the bulls can hold it, all they really have to do is break that. Really here, all they really have to do is break this, and that curl look goes out the window, and then you oftentimes just end up breaking the high of day and making an attempt at a push, and then maybe you curl later. So, straight up, you're trying to time it, but that's what makes it lower probability. You don't have the information. Every trade it's a spectrum, right, of reward to risk potential and perceived probability. It's not like you can run the calculation in real time. It's just perceived probability. And then over time, your discretionary calls get a little bit better. A little bit better. Benjamin, good morning. Says started the day off right, caught that big wick for 318 points. Man, I wish we had a 300-point move. You mean 300 bucks? A 300-point move, man. That would be nice right about now. Okay, so you see, here we are testing that little flat top. Let's see if it breaks. Well, I'm thinking about this. Maybe we should give this a shot, huh? A little bit different from our typical trade, but just take a little stab. If we end up breaking this higher, really any higher than this, and I would lose interest. But I'd want to be in a position where I can place my stop above this wick, but not have it be a sucker stop right above the wick. So if I can get an entry right around maybe, yeah, at least 405. By the way, I'm talking short side, just taking a little stab at a curl before we see a push. Because, I mean, really, we have a flat bottom here, and then an argument for a slightly descending resistance. And that would be a lower probability trade. It would offer decent reward to risk. The only problem is volatility needs to pick up. We're still below. We're below 25 on ATR at 9:30 in the morning, which is tough. But I would size down on this, by the way, because probability is lower. You see that flat bottom there is brutal. All right, Bulls, let's see if we can get a little retest. Joseph says, question, on non-trend days where continuation trades are rare, have you ever used a 1-minute chart to chart the range and take structure scalps? I prefer to do so on a 2-minute, personally. The 1 minute on like small cap stocks is great. On futures, I think for whatever reason, to me, well, I know why, because you get more setups, but they tend to be slightly lower quality. And then the higher you go in time frame, you get less setups, but they tend to be slightly higher quality. So it's choosing time frame, guys. To me, really, all I think about it as is finding a balance in your trading, and that balance is between quantity of setups and quality of said setups. All right, so I'm thinking about sizing down a bit here, lowering that R, and taking a little lower probability, better potential reward to risk. kind of always in mentality, but not really. Like an always in trade is slang for, you know, you take a trade shortly after the open and then you scalp around it kind of all day and you close it before the bell because you have a directional bias. I just don't care about directional bias right now. I don't care. Look at the daily chart. I don't think anyone has any kind of directional bias at all. It's just a battle. So just give me whatever during the day, and chances are, based on the recent past, chances are we stay relatively inside of the range. So let's see if we get a little test of 405 here. Man, bulls didn't really give me my test yet. Now again, the reason I'm being selective about entry, like, well, 401, 405 with this kind of position, really what's the difference? Well, for me, there's a big difference because that determines whether my stop is right at the sucker stop position or I give myself at least a few points. I would love 10 plus points as far as my stop, but I'm not really into going over 40 points for a stop on this trade. I'm already sizing down. But now the lower this goes, the less likely it is that I get my entry. But let's see if we still can. Plus, by the way, another factor here is that 20 EMA on the 5. A little more. We got 404.50. Limit order out. See if I can get a fill. No fill on the limit yet. Look at this. it's out, no fill. I missed it by like a tick. See if we can get a fill. Now again, you might ask, why didn't you just put a limit order out at 405? Because I don't like to do that, because oftentimes in tariff talk time, you get wicks that cause problems, and it wakes up and fills you and shoots to 470, which obviously sucks. You get instantly stopped. In a more stable market environment, sure, I might be into that, but leaving that limit order out for a second here because we're just a couple points away. There we go, and I'm filled. So, by the way, that's a lower probability. Just bet on that little flat bottom continuing to maybe break, and the bulls not necessarily being able to improve upon that news wick that we saw here. Again, lower probability bet, decent reward to risk, a little bit better likely than 1-to-1 is what I'd be looking for here. So let's see if we can make that work out, if the bulls can kind of fail this attempt at a higher push. Hey, Nico, I have a question. Is Apex code for big? Does it allow you to pass an eval in 1 day? Well, I'm glad you asked. Yes, sir. Yes, sir, it does. You can pass in 1 trade if you want. Just to be clear, you can pass it in 3 seconds if you want. Not that you necessarily should, but just to make it clear what that allows you to do. Yeah, if you use the code, you can pass it as quickly as you'd like, and there's no issue with that. Yep, so I'm sitting short. My average price here is 405. I have my stop up at 21,445 above that wick. Right. So it's kind of it's a few points outside of the sucker stop. It's still kind of in the sucker region, but I'm not going to expand that to 60 points. I'm not interested in doing that. And my take profit currently sits at 65, which by the way would take out any stops that accumulate here, but I would like to improve upon 1-to-1 reward to risk. I'll leave that there for now, just in case we get a dump off, take out some stops. I don't want to not get filled and we lose some steam or whatever. But if we make a sustained push, I might end up moving that lower. Pumple says, you can also fail the eval in 3 seconds. Trust me, I've personally tried it out. That is correct. You can fail in 1 second. Or about 10 points in the green on the trade as it currently sits. Corey, what's up? Appreciate you. Pumple says, would you agree that if a trend line is aligning with the 5-minute 20 EMA, it has higher probability of holding? I would agree with that. I would agree with that statement. All right, so here's how we're currently sitting as far as open P&L. Again, I'm sized down, so this is half, maybe a little bit less than my typical trade, just because the probability is lower. But there's the open P&L for you. That's live. Let's see if that trade ends up working out for us here. Now, I think... Yeah, I mean, if we look here at the look, I'm going to leave this right now. I would not... Well, actually, you know what I'm going to do? I'm going to improve upon that reward to risk. Where's that at? 62. I would guess that's good for a 5-point push. I'll put it at 475. Improve upon that reward to risk a little bit here to start. And we'll see. We'll see if I need to adjust that at all. Adjust downside is really what I mean. Joseph says, you ever dollar cost average into a trade? As in if it pops back up to add another position, average in? Sure, 100%, 100%. Not on this trade. I like my average here, and averaging in, if it's not a trade that I would take on its own, Joseph, then I think doing so is oftentimes an emotional decision. That doesn't... I don't want to paint with that broad of a brush because sometimes it might make sense as you get more information to DCA in. Again, I'm not going to on this trade, but I'm not, listen, futures, you guys know my theory on futures. It's different than trading like small cap stocks, for example. Futures are priced very efficiently. Okay, so they tend, without news, they tend to kind of hang around a core. So if you're in a range market, especially, and a trade goes against you, you know, like in a personal account, for example, I think it makes sense. It makes sense in some cases to add to losers, but you have to have that like, okay, I gotta cut it now. You have to have that. If you don't have that, you're gonna get cut deep someday. Might not be today, might not be tomorrow, but it's coming. So I think it's a more, it takes more experience, I think, to do that responsibly. But like, if someone's like, you should never add to a loser, they're probably saying that because they've done it and gotten hurt. But you have to understand how futures are priced to really make an assessment on whether or not that's a good or bad idea. If you're in a range market and you understand that futures are pretty damn efficiently priced, not quite as Forex, but I'd say they're probably in the number 2 slot as far as being priced efficiently, which means without news, without catalysts, they tend to trade around kind of a core. I mean, it makes sense, right? But again, you can do it responsibly, and you can do it just horribly. All right, Bears, take us through that little flat-ish bottom. A little bit of a descending level now, but still kind of a flat bottom, all considered. Currently about 23 points, 24 points in the green on the trade. Now that 5-minute 20 EMA is creeping up on us. It's coming up to about 366. So if we can get a test of that, let's see how that kind of reacts. Yeah, Clinton, man, I don't think... Clinton says, I wish I could see 20 seconds into the future. I don't think any of us have ever had an original experience, because I think there's about 1 million of us that have just sat here and thought to ourselves in silence, if you could just see 20 seconds into the future. But to be fair, even though you could make all the money in the world if you could, I don't know if you'd want that. I think that would be a weird existence. Yeah, Scooby says I would want that just for the market. Yeah, if you could see maybe 30 seconds into the future, but only for the market and nothing else. But I gotta tell you, you know, I mean, it's very tempting. Sounds great. But let's think about what that would actually look like. You wouldn't have any motivation to be better. You'll just win everything. You'd be the best scalper in the world within months. Actually, probably within weeks. So it's like, then what's the point? Part of what's so nice about trading, I think, is that when you win, it was you that did it. But if you're guaranteed to win every time, I think you would pretty quickly lose the enjoyment. Well, it's trying to take us higher, sitting right around break even on the trade, few points give or take. Now again, that 5-minute 20 EMA here, that's creeping up on us. Now my take profit I have at better than 1-to-1 reward to risk. Okay, my take profit I have in the high 50s. I gotta tell you, I'm gonna leave it. All right, bulls popping us through those little highs. When we entered, that was more of a descending resistance, turned into a little bit of a flat top. That's the pop through the flat top. Still have that wick high. That wick high, though, on the day, that's a news bar. You guys remember that bar? So we're currently 17 points, 16, 15 points in the red on the trade. Stop is above that big wick news bar. At least, 3 or 4 points higher than that big wick news bar. Again, I don't like being too pressed against that news bar. Wick high. Kind of a skunk region as far as being a skunk stop. I'm not into that. But I'm less into expanding my stop just for the sake of not having it there. End of the day, risk management wins. Pumple says, is it against Apex's rules to close a position at break even? So Pumple, you got to think about this as put yourself in the shoes of a rep who's looking at your payout, deciding whether or not to approve it. If you're going to stop yourself at break even, don't stop yourself one tick in the money. Because what does it end up looking like if you get a perfect fill? It ends up looking like a one tick winner, which breaks the 5-to-1 risk reward rule. So if you're going to use break-even stops, or you're going to cut a trade early, let's say break-even stops first. If you're going to use break-even stops, you want to make sure that you're setting it at break-even, literally at break-even, so that best case scenario on fill, it's an actual break-even trade, and worst case scenario, it's a 1 or 2 tick loss, which will show when the Apex rep looks to decide, okay, like, did you break any rules? Are you a good trader? Like, can we give you your money? You don't want to give them any reason to say no. So if you're closing a trade early as well, try your best not to close it like 1 or 2 points in the green, assuming your stop loss is more than like 10 points. Don't give them any reason to say no. Stefan, is it the same for Take Profit Trader? No, Take Profit Trader, they have rules, but they have way less. That doesn't, in my opinion, it doesn't necessarily mean it's so much better. What I think the selling point really on Take Profit is their dashboard is really easy to use, and they really have a lot less rules, but really it's the daily payouts. That's the big deal with Take Profit. It's a beautiful thing. Money's in your account. Once they approve it and you press proceed, money's in your account in like seconds. All right, Bull's trying to take this baby higher. Again, I'm sized down on this trade to about half of my typical size with the same stop. So I'm risking 0.5 R on this trade to make a little more than 1-to-1 reward to risk. So, let's see if the Bears can step in, turn this baby around. Oh, there's a push, baby. That's gonna stop us. All right, I gotta get flat. All right, that's yeah, 0.5 R loss. So let's move on. I'll size back up if we get a nice clean setup here. If we end up putting on, I'd say anything B, B plus, maybe A minus, more like B, B plus. I'll stay half size. Exponential bet sizing, I think, is important. Yeah, I mean, you see here, that was good for maybe a 6.5 point pop, 7-point pop. But this was a news wick again, so how many stops go up there? Probably a little bit less than if it was a clean curl. Like if this had curled and pushed lower, then you have this as the high. It's a lot cleaner. You probably get more stops there. Ends up being good for a 10, 15 point push through when you break that. Here, 5 to 10 points, pretty much exactly what we got. This is a break-even point on the day, by the way, for the Nasdaq. You see that? We're 0.02%, 1% in the green. So I think of that break-even point on the day as like a tier 1, tier 2-ish level. Important. It's not the end of the world. It's not like 20,000 where you might get glued to it all day, but we've been getting glued to the break-even point for an hour here or there for the last 2 months. Yesterday's high was 474 and a quarter, at least during the New York session, and we have this flat top, remember, right around 21.5. And I will. I'll take a little long there on that pull-in. Again, I'm sized down here on this trade. Just looking for a test up into 21.5 region, but that's a region, okay? So again, size down. I'm half size that I would normally be on like a typical with like no problem. Hey, we also have stop hunting mentality involved. We don't have that here. So I'm sitting long. Average is going to be 53.50. Stop way down at 413.50. And take profit currently up at 493.50, right ahead of 21.5. That's on purpose, by the way, because I know 21.5 is going to be a region, maybe 25, 50 points surrounding 21.5. But the whole area, I'd rather be out before we start messing with that. So the bears might start expanding this into a little bit of a channel. That's fine. I just want to be involved here after that nice clean close that we got on that bull bar. So bought the rollover, waited for a little bit of a pullback, sized down, stayed half size, and we are now involved. So see if the bulls can take this baby a little bit higher. Again, risk here is just going to be 0.5 R. Staying small, baby. Quicksilver's long. Goodness. I don't think I've ever seen this happen. This is a historic event. Well, about 10 points in the money here. Now again, remember, we have that big flat top on the daily right around 21.5, but it's not going to be an exact science. That's going to be a range. 12 points in the money. Again, size down, half size here on this trade, same as the previous trade. So that is the live open P&L. Currently 17, 16 points in the money. My target currently sitting at 93.50. That's where it ended up after my entry. Again, that was thought of ahead of time. I didn't want to have my target any closer than that, or especially above 21.5. So that's where it's sitting. Bit of a doji there. to tell the bears are trying to step in. Let's see if they succeed here. I'm just interested in seeing if we can make a little test to 21.5, and I'd take this off just ahead of there, 93. Currently about 15 points in the money, 18 points in the money. See about 5 more points here. Come on, Bulls, give us a push through 93.50. Just a little extra. There we go. We are out there. Got a flatten here. All right. So we were out there. So that was about a $2,200 winner. So after 2 trades, we're sitting break even on the day. See what else the market provides us with here. Now remember that daily chart at the bottom, that's a big old flat top that I'm not really interested in messing with here. Like, if we get a great continuation setup here, it's so tempting to just say, let's just get long. We're going to break the flat top. But remember, 90% of breakout attempts have been failing as of late, which is crazy. So I can't bring myself to get long, even if the continuation setup is clean, because of that nasty 6-day long, or almost 7-day long flat top. But if we can get a push through the flat top and get up to like 550 or 600, all of a sudden I'm back. So let's see if we can kind of get that. But I have a feeling that these bears are going to look at that daily chart and say, come on now. Now you see here, these bears, they're gonna try to step in and say, did you guys forget about this flat top here? They're gonna try. Let's see if the bears can succeed or if the bulls rip their face off. But I gotta grab some coffee. I'll be back in 2 minutes. Don't go anywhere. All right, trying to blow through this little top here again, pushing through 520. Again, it's going to be a range, the flat top, anywhere from, I'd say like 475 to 40 is what I'd kind of call this flat top, somewhere between there. But I'm indifferent. If we blow right through and keep going, guess what? Continuation's on the table, baby. But if we reject, same idea to the downside. If we end up forming a little channel, I'm cool. Whatever gives us setups, I'm open to. What I don't want is nothing, which we got a whole lot of the last couple of days. By the way, range so far here on the New York session is good. It's 250, 249. That's a great improvement over, well, an hour from now, yesterday. So 12:15 Eastern time, 11:15 Central. Yesterday, the range on the whole day. Today's 250. Yesterday was 96. So be grateful today. I'm certainly in a better mood. But I gotta tell you, now that we've expanded that range to 250 on the day, even if we curl and hang out inside of that range and stop expanding it on the day, I'm fine. I'm fine with that. We got plenty of room down to the 5-minute 20 EMA. Well, I wouldn't say plenty, but 80 points or so. 75 points. I'm definitely not against taking quicker hitters here. Making smaller asks of the market, leaning into negative reward to risk. And just hitting setups as they come. Zach, can you expand on that? Yeah, so I'd be looking for, you guys know, upside continuation if we break higher than like 550, especially 600, and we got a good sequence, like the trade I took previously. We got a good sequence heading into that level, and I was out before we tested 21.5. I'd be looking for downside continuation inside of the range, right? So kind of before the low of day. Or even if we turned and tested low a day, I could use that for some stop hunting. But that's a far cry away, at least with this volatility. And channel scalping. And then since ATR is sitting around 20, it's not above 25. I'm interested in leaning into negative reward to risk. Maybe leave a 40-point stop. If it collapses even more, maybe end up pulling that stop back to maybe 30 points and then taking 15, 20, 25-point winners. Off of the 3 previously mentioned setups, channels especially. Trading Chris, what would the next major level be? 22,000? That's a tier 1 level? That is a tier 1 level. Chris, 21,000 is tier 1, 22,000 is tier 1. 21.5 is tier 2. You know, my thoughts right now, guys, I'm I'm not necessarily going to take a trade off of these thoughts, but let me just explain. Right now, I'm thinking I'm kind of in a position of power, I'd say, psychologically. Okay, because here's what I'm thinking. My bias right now, because I know we're in a range market, I know we have this big old flat top here on the daily chart, bottom of your screen. My bias right now, if you force me to pick one, I would think that we'd probably fade and head back into this range and respect that flat top for another couple of days, at least today. Knowing that if we burst through that flat top and get above 550, above 600, I will be in an even better mood. Which is great, because in that case, we've expanded the volatility, and that'll probably carry over into the next couple of days. Now, does that mean I'm going to get massive short here right now? No. No, but yeah, if you force me to pick a bias, that would about be it, with the understanding that I'll be in an even better mood if we can get a pop. No, the positive thing here is even though we're heading right into that flat top here, that's clearly why we're stuck, is at the flat top. We are 60 plus points in the green on the Nasdaq, which is not a lot. It's 0.3%, but it's better than getting hung up at break even. I'd rather get hung up at this flat top because this is really the area we need to test, and then just see what the market decides. But this area's been holding us back for a week plus of trading. Bumple says, I didn't quite get your idea with the flat tops. Aren't they like a magnet for the price to go to since there's a lot of resting liquidity? I would agree with that, yeah. And that I would think that that's why, as that flat top became more and more of a thing, we got more and more stuck with low volatility right below that flat top. So I wouldn't disagree with you. But eventually you get a test of it, and the market says, okay, that's enough, and oftentimes fades or pops through, which I would suppose is more ideal. The best case scenario right now for us as traders, volatility-wise, would just be to get a big old fade back down below 21,000, head back toward 20,000 maybe, quickly, because that would improve volatility the fastest. But second best scenario, because in up moves, volatility tends to be lower than in down moves, but second best scenario would be a pop through this flat top here right now and just get it out of the way. Because realistically, if we do fade from here on the daily chart, like we fade back down toward 20,000 and leave that flat top in place, then we're gonna have to deal with it again at some point. All right, there's a push into new intraday highs. Into 530. We just want somebody to win. Doesn't really matter who at the end of the day, bulls or bears. Somebody needs to win because no one's been winning these past 6 trading days. It can be kind of a trip because you see, 5, 6 bull bars, one little bear doji body on the daily chart, and it's like, well, there's a lot of bullish behavior going on, but we're not going anywhere. What that really means is, hey, maybe we're just fading overnight, opening lower, trying to push during the day, and then failing. So yeah, it looks like a lot of bull bodies in a row, but what does that really mean? It tells a different story than the market is really bullish, because it hasn't been. It's been indecisive. Now remember, just a heads up here, as far as news, not that this is very relevant to us, but we do have Trump greeting the South African president here in 4 minutes, a little less than 4 minutes. So will we get a headline out of that? Probably not, but just be aware that if we do, that's probably what, if we get a Trump headline, I guess it's probably coming from there. Not that we have a lot of reason to believe that we will. Then again, at 11:15, we have a Fed speaker. So a little bit of kind of a weird day, not a high expectation of getting some big like China tariff talks or something like that, but they can always come. But it's important to be aware of what's at least on the schedule, because we can control that. Chris, is it valid behavior to adjust the RR of live trades based upon ATR? Would you say that it enables emotional trading? If it does enable, it can, for sure. If it does enable emotional trading in you and you recognize that, then you probably have to cut yourself off from doing that for a good amount of time until you feel that you've earned the right to be more discretionary in real time, because the emotions are no longer really a factor because you have plenty of data to back up your confidence now, right, or in the future. But I think it's entirely valid behavior to adjust the RR of live trades. Like, listen, if you took a trade that was meant to be a scalp and the ATR when you took it was 40, and you're running a 40-40 reward to risk, and for some weird reason the market just flattened out, and you're sitting 7 points in the red, 3 points in the green, and it's been 90 minutes or 45 minutes, and you're like, this was supposed to be like a 3-minute scalp. What the hell's going on? And it just happens that you kind of trade inside of your own bracket for an hour, and you look up and ATR was at 40 when you entered, and now it's 11 or 9. I would say it makes sense in a lot of cases to either just close it out wherever you're at or tighten things down, because the bias when you entered the trade, you really didn't account for like a 3-4 hour long bias. You were looking at a few minutes, maybe 30 minutes kind of tops, and now you're well over that. So yeah, it makes a lot of sense. But that comes into discretionary call making, which again, I made a video on this, I forget how long ago. In the early days, I think it makes sense to be mostly, if not all, robotic, whereas most people, this is a spectrum, right? It's not one or the other. It's always a spectrum, like almost everything in life. On one end of the spectrum, you have here. On one end of the spectrum, you have robotic. On the other side, you have discretionary. Most people, when they're new, they don't really understand the concept of being robotic, so they're like, okay, well, I'm day trading. I'm a day trader. So I just make decisions all day and I'm better than everyone else, so I make money. Well, kinda. But in the early days, you're not better than everyone else. You don't know how to be better than everyone else. You're competing. This is the big boys stage, man. These are the big leagues. So like, if you're newer, you don't have the resources to be better than everyone else by making discretionary calls. That's not a dig. You just haven't watched charts for decades. Like the competition, or at least years. So you don't really have reason to believe that you can make better decisions than they can, right? So instead of being like everyone else and starting discretionary with a weird, it's all ego. And a little bit of not just being educated about like what you should really start as. Start robotic. Just come up with a plan and say, I'm gonna test this. I'm gonna enter when this happens. I'm gonna set my stop at this. I'm gonna set my take profit at this. Is that best long term? No, you guys see that I'm mixing the two all the time. I'm making discretionary calls mixed with robotic behaviors. If you're just robotic, you're gonna miss the things like, okay, there's not really, you might miss looking for stop hunting. You might miss thinking ahead of where your take profit's gonna be, like we just did on that 21.5 trade. Took it off just before the test of 21.5, not to mess too much with that flat top. Like you might miss those things, but that's okay. You get data. And then as you go, you end up somewhere in the middle of the spectrum. Some traders are mostly discretionary, but they're gonna have robotic tendencies. Some traders are mostly robotic with some discretionary tendencies. I'd probably put myself closer to the middle with maybe a slight lean toward robotic, but that's not really fair because it depends on the market condition. I might be more discretionary in some markets. But you're gonna end up somewhere in the middle. Does it really matter where you end up? No. If you found your edge and you're cool being more discretionary or more robotic, but that's like way down the line. Or at least a bit down the line. All right, Bears trying to pull this all back here. Now, we have a little bit of a flat bottom there. It's pretty obvious. You can see that, right? By the way, the Apex deal, we were 80% off, is over. They went back to 50%. Okay, so it's 50%, but you can still pass in one day. But Apex does run better deals. If you need an account and you're like, yeah, the business model still works, that's fine. I've bought accounts when they're 50% off. It's really no big deal. But by far right now, the best deal is going to be Take Profit Trader. Daily payouts, 30% off, and here's the headline, no activation fee. They wipe it if you use code BIG. If you don't, you're stuck paying over $100 to activate it. If you use the code, they just activate it. You don't have to pay anything once you're through the test. I like Take Profit Trader. It's really a good setup they have over there. You see this flat bottom here is brutal. Let's see if the Bears can pop through there. Aaron says, when Tradeify? Yeah, Tradeify is my next stop. That is my next stop. I'm not sure when. Kind of just waiting to hear from them. But shouldn't be long. Michael, trying to get my second Take Profit Challenge pass so I can reset my other funded and trade both. This challenge has been a struggle. Not switching to minis though, holding strong. The best way to go big is to trade small. Scale horizontally. Telling you, it's the way to go. The best way to stay small is to trade big per account. All right, average true range currently sitting at about 18.5, 18.6. Again, it's not tremendous. It's tight. It's well below 25. But listen, I'll take 18. I'll take 18 over 9. When that ATR is less than 10, man, it's time to walk away. It doesn't happen too often, but sometimes in the afternoon, that's like Asia session territory. Newbie here, could you explain what you mean regarding the tier and R levels? Well, I'll explain the tier levels first, and then we'll talk about R. So tier levels, S tier, which is top. 15,000, 20,000, 25,000 on Nasdaq. Tier 1 is going to be like 21,000, 22,000, 23,000, 19,000. Tier 2, 21,500, 19,500, 22,500. Tier 3, 21,300, 21,400, 21,700, 18,700, whatever. And then tier 4 is going to be every 50 points. So 21,550, 21,650. Now the R levels, I'm not sure. Are you asking about R, like risk per trade? When I say like, okay, I'm risking 0.5 R, or are you asking about the ATR, which is the average true range? Biker Pilot. You can see we're still testing that flat bottom. There's the push through the flat bottom and 21.5. Let's see if they can hold that. Biker Pilot asked about risk. Yeah, so R is just going to be your most typical or your average dollar amount risk per trade. It's not the points, it's not how many contracts you're trading. I base R off of, okay, what is my most common and like my average dollar amount risk per trade? Because then if you take like a 0.5 R risk trade, that's half size, okay, dollar-wise. Now that could look different as far as how far away is your stop, how many contracts are you trading, but if the dollar amount, if you're risking half as much as you typically do, that's still a 0.5 R trade, whether it's 10 contracts risking 50 points or 20 contracts risking 25 points, whatever. Same dollar amount, right? So when you start using a factor like R, which all of you really should be, you're able to compare your performance not in dollar amounts, but as a factor of R. So for example, yesterday was a really slow day. I took 2 trades and I finished up like half an R. I think it's important to clarify that because someone can say, yep, I made, I'm up $4,000 today. They can say that. And, to be fair, it's easier to understand. However, it's also can be kind of misleading sometimes to talk like that all the time. I think we should talk about that sometimes, but all the time, because what if you risked 30,000 to make it? And your win rate's, 60%, so that's not adding up. So expressing everything in a factor of R helps us all understand, and you can adjust it to yourself as well. If maybe you're trading way bigger than someone else, maybe you're trading a lot smaller than somebody else. It puts everyone on a level playing field, as far as understanding the trades a little bit better. Not that we should all be on a level playing field. This is the big leagues, man. You can see we're flattening out here. This was very, very expected. Flattening out right around that flat top. I mean, you can see bottom of your screen, that daily chart. It's very, very common to see that. There you go. Do we have audio here now on the daily? We should have audio here now on the daily. You guys can see that flat top a bit better when we look at this look. That's what we're messing with right now. That flat top there, that thing is brutal, man. Richard says, Nico, do you set ATR in Ninja at the default settings? No. No, on a 2-minute, well, maybe. I don't remember what the default settings are. I just put it on the 2-minute chart. You just throw it on a 2-minute chart and it automatically is the 2-minute chart. And then I set the value to 10. And then, Richard, what you want to do if you want it to look like mine there is you want to overlay not just the ATR, but you want to also overlay the range indicator on the same section. The way I have it set up is not a default indicator. The blue is really the ATR, and the yellow is the range, and they're overlaid on top of each other in the same like indicator section, lower section in Ninja. That's how you get that set up if you want it to look like mine. Now, really, for me, I'm thinking about this little flat top here. I'm interested, though, to see if we break higher and make a push, or if we end up hanging out here for a good chunk of the day and then fading. For me, 550 is kind of Yeah, 550 for me is kind of the region where if we push through 550 and hold it, I start to have a little bit more confidence that maybe we'll break that flat top today. Right now, I don't have a lot of confidence just because the market hasn't provided us that yet. Why should I give the market the benefit of the doubt when it's failed this same breakout 6 days in a row, you know? Yeah, Richard, that'll set it up the way that I have it. We end up forming a little channel here. You can see that. We have only 2 touch points thus far. But a little descending resistance with a little descending support, if we could put that in, which for me would require a push and taking out this little wick a little bit lower, and then a retest. I would short that. I'd short that for a push back down through 21.5. But it requires a little bit more to play out here. Just a little bit more. Let's just see if these bears can take us a bit lower. I'm not a fan. Here, let's look at this. When the futures market does this quite a bit, you get this kind of thing going. And then rather than this, it kind of turns into this, you know? And then you get an ugly wedge. I would much prefer to see the descending support happen. But, you know, a wedge is not the end of the world either, because realistically, what happens in a wedge like this, where it's aggressive, kind of coming to a point, well, it's 50-50, but it breaks hard one way or the other. And that gets us to better decision making more quickly. So let's just let this thing work itself out, and then we can get back to business here. I mean, listen, when you start looking at it this way, I think it starts to make a lot more sense to maybe hold off. I could see an argument if someone was like, well, you know, I'm gonna take maybe a lower probability, higher potential reward to risk short here on this retest. I wouldn't necessarily blame them. I could see that. But you'd have to understand that it's a lower probability, because now you're betting on not only this holding and the bulls not breaking it out, which is closer to 50-50, I think, that I would prefer. But you're also betting on not only that rejecting, but the bottom piece of that wedge breaking hard. But the only reason that you could justify that is because reward to risk is quite a bit higher, because you'd cut it pretty quickly here, right? But if you could get that playing out, then you'd get a pretty good reward to risk, because you'd probably end up breaking downside through 21.5, which gives you at least maybe 25 points. But that's tight. That's tight, because the breakout probability here is very close to 50-50 either direction. Now again, 21,550, a break and hold of that would give me a lot more confidence if we can hold it well, not just kind of tease around it, but hold it well. That would give me a lot more confidence that we're actually seeing a break through that little flat top on the daily chart there at the bottom of your screen. We see that wedge is starting to play out here now. We're getting a little bit of a break. Let's see if the bulls can hold that. Got to reclaim the intraday highs. mean, you can just see it. It's slow, right? It's a battle right around those high of days. The highest top that we've seen in this entire flat top, you would think it's this bar. It's not. It's actually this bar. The highest top we've seen is 21,544.50, at least during a New York session. So again, that's why I'm having reason to believe that if we can break 550 and hold it, that gives me a lot more confidence. But right now, I just think that it's still not necessarily unlikely that we see these bears at least fade this back a bit. And here we are seeing that. See if they can bust down through the low of that little wedge. All right, here's the test. There's a 2-minute chart look. Now, I'm less thinking about that 20 EMA, the bluish line, right? I'm more thinking about the bottom of that wedge that we really haven't seen a break downside through yet. Let's see if the bears can just completely reject the idea of holding a break of this flat top here today. Again, I need these bulls to prove it to me. If we're going to break the flat top, the bulls have to prove themselves. I'm not just going to give them the benefit of the doubt when it's been days and days of failures in a row. Nah, Ryan, I don't have like a traditional job. This is what I do. Oh, we got kind of the bouncy song going. You see this wedge here, man? We are tight. Give you this look. That it is. We're right at that peak. This thing's gonna pick a direction and go. At least I'm hoping. This is always kind of ugly right here when you're right at the peak and the market still hasn't made a decision. Now, if you're wondering where probability sits, it's about 50-50. As far as which direction do we pick when we're in a scenario like this, it's pretty damn close to 50-50. You have a little bit of variation because that flat top is right between 5 and 550. So maybe probability is slightly leaning toward the bears. Okay, but it's not tremendous at all. It's not like we're looking at 80-90% probability of going lower. It's probably slightly better than 50-50. to the lower side, maybe by 1% or 2. Which for me is like, I don't know if that's enough to just put on a big short right now. All right, guys. Well, listen, if you need some accounts right now, by far the best deal between my favorite props is going to be Take Profit Trader. Daily payouts, 30% off, and using code BIG, B-I-G, saves you over $100 when it comes time to activate, because they don't charge you to activate it, which is good, obviously. So remember, guys, Fed speaker at 11:15 Central, which is in 13 minutes. So it's Fed's barking. I don't imagine we're going to get a whole lot of tariff headlines out of that speech, but be on the lookout. Again, make sure you're running live stop orders in this market environment where tariff news could move the market. It hasn't been lately, but when we get random tariff news, again, back maybe 6 weeks ago, it was a 400-point move in minutes. Okay, so protect yourself in this market environment. This isn't really a normal market environment. It's a little bit odd right now. Use live stop orders. If that occurs, you're going to thank yourself. All right, guys. All right, guys. Hope you have a great rest of your day. I'm live every morning. Every morning, right before the market opens, right around 8:15 a.m. Central Time. If you have not done so yet, please subscribe to the channel. Leave a like on the stream. It'll make your life easy when you open YouTube tomorrow morning, and I will see you there. Finish out the day strong, guys. I'll see you tomorrow. All right, have a good one.